Hello and welcome to the weekly Scholar Strategy Review. In this video, I'm just going to dive into three pairs, and this is what I've been doing for the last 3 weeks. I just want to show how effective the strategy that I teach in my Trading Masterclass playlist actually is. Okay, so let's dive right in. So I want to note first off that one of the main rules of the strategy is make sure all the EMAs line up. When you start seeing them consolidate, it's best to probably stay out for a little bit, right? Until you can see moves that are very clear. So what ended up happening is near the end of the previous week, I started noticing a lot of the moves up and down, and I really didn't feel comfortable jumping in on trades that were still bearish in nature. Okay, and as soon as I saw on Monday, right, this kind of tip off this wick and it kind of blew through the other one, but then it touched again, started going up, right? This showed me that EMA started shifting upwards, which meant that this line right here, I'll have to drop to the 30-minute to show you, right? But this guy right here would have been a nice entry. However, that happened the half an hour previous, so that would have been a miss, okay? But this line right here would have definitely been on a buy, okay? So you can see it dropped, oh, so close, 13.7, right? It didn't hit that 15 pip mark. But, did it hit 15 in profit? Yes, it would have, right? So here's the situation. This would have been break even, right? Unless, of course, you risked and were able to keep it after that line, because judging how this actually happened, it doesn't really matter that on this line it hit break even and a stop loss, right? The issue would have been that if it went up first and then down, right, you would have broken even at that point. If I saw it kind of sitting on that line anyway and not going lower, I probably would have taken a risk and took another trade for a buy, right? So at this point in time, following the rules, this would have been a break even, unfortunately, okay? And once it hit this line right here and rejected, so you can see right here, if it went in, an entry was taken, it went up to a point of, nearly 15 pips. 14.6, I still would have moved mine up to a break even, right? So it would have broken even, and, at that point in time, even if it wasn't moved up, the break even definitely would have been hit when it hit the high of 35 pips, right? And then kind of went back down. So this, again, a break even again, unfortunately, right? But when you saw the big drop coming here and then it peaked, but it didn't break through those highs, right? That would kind of indicate to me, hey, this is not a good time to take any entries because it's kind of volatile, right? The pair is volatile, and you can see right here, right? You would be snagged out of a stop loss, and then this would just be a break even, right? Even the next line right here, it would have been tough to gauge. Maybe it would have been going up or down, right? Because you can see there, the shorter lines are going down, the larger lines are going up. The biggest one, the 987, is pointing slightly down. They're all over the place, right? So this is what's called the consolidation zone. Don't take any trades inside of that. The only one that would have been valid is if you see these EMAs shift and 3 of them are pointing down, right? That's a pretty good sign that it wants to continue going down. So this, if it would have triggered entry, right, and how close would that have been? Half a point, right? Maybe 0.8. So again, depends on the spread of the broker. Could have been lucky and snagged that trade, right? But at the same point in time, it only went down 41 pips. So still kind of within the trade, not too shabby. But then as markets opened, it sort of did the same thing. It was about 2 to 3 pips off of hitting this point. But I do believe USD is going to continue on its way down. So now, after all that nonsensical volatility, there's 2 ways of looking at it. There, you could draw the Fibonacci from the last low that it had right here and to the high. So potentially it could still drop down right here before it reverses. There's a big imbalance left right there, right? So at this point in time, it's at your own risk, because there's 3 pointing down and 2 pointing up, right? The white is up, well, the brown is kind of sideways and the black is down. So one way or another, I would say maybe still pretty decent for it to drop, but a little more risky than when all the lines are aligned, right? USD CAD, as you can see here, this was a consolidation zone, so I'm just going to delete that right now. But expecting that it would still be going up, right? It just had a little rejection from these lines there. And but overall, not a very comfortable situation to be trading on, right? You have the smaller ones going down, the larger ones pointing up, everything kind of zigzagging, consolidating there. Not great to enter in on, okay? Just for an example, if you would have taken any entries, right? Where would you have grabbed this one? Like this would have maybe been a sell on the short term. You know, could have gotten lucky and made a decent amount of pips. But then the next one, you know, you would have taken a sell and immediately it shoots up 80 pips before consolidating and then hitting a break even, right? So, I mean, last week was a bit of a mess, especially near the end of the week where everything just was going sideways, a lot of sharp, volatile moves mixed in with a bit of consolidation, right? So not the greatest trade week of all. I personally did, I think, one trade at the beginning of the week on Euro JPY, had a win, and then I stayed out, right? I didn't really see a whole lot of good potential setups. But now that it had its pullback right to the black EMA on the 1 hour, I would say it's back to being bullish, right, for USD CAD. So as you can see, even on here, it's had its pullback, kind of hit a double bottom. So good potential chance that it's going to keep going up. All the larger EMAs on the 4 hour are all pointing up, and when the small ones are pointing down, sort of, right? They just reversed in the last day or so, right? So good potential chance that on the 1 hour, once it crosses that white line here, that'll be a good indication for me that, hey, you know what, this is going to be going back to bullish. And now Euro JPY, right, the trade that I ended up snagging was right here at open. All right, so I grabbed this guy here. Where was it? Friday? No, it was on here, this one. Okay. I grabbed this one at open. It was starting to climb, and then within 5 minutes, it went up almost 100 pips. So I'm like, holy, that was fantastic. So I closed it off, right? And then sure enough, the next one, just a giant big punch in the face. So that would have really sucked. But yeah, so as soon as I saw that open and it kind of triggered, I'm like, great, you know, let's ride it. And you know, I didn't actually set a TP. I just watched it go because it was climbing something like 20 or 30 pips a minute. I'm like, wow, this is going to be fantastic. So I let it ride. I think I closed it off with, overall, I think it was 89 pips in profit before, you know, when I started seeing a little bit of a pullback. I'm like, it's enough for me. You know, I already doubled my, almost doubled my TP, so I'm good for that. Right, and then when I saw that sharp move down and then kind of all over the place, I stayed out for a bit. Right, this one was close. This would have been, if you'd entered on a buy stop, still a break even. Right, this one would have been, let's take a look right here actually. That would have been just barely a loss unless a buy stop was taken, then profit made. This would have been a miss. This would have been a break even, that would have been a loss, and then it kind of went all over the place, right? So nice catch at the beginning, but overall, you know, still profitable, but you got to be careful when you start seeing a lot of consolidation. Just stay out of the market for now. All right, don't take trades just because you feel you got to be in a trade. Like, just understand that there's going to be good opportunities and bad ones. And when you see the lines very close together and zigzagging back and forth, not the best time, right? Even today, since market opened about 2 hours ago, I'm doing these videos a little late. I felt very under the weather yesterday. But as you can see, right, as market opened, it just dropped 10 pips below, and now it's sitting at 19 pips in profit, 18 pips. So, I mean, right now it's at a break even, right? And as you can see, the red is like it's live, so it's dropping a little quicker than anticipated, right? So it is what it is. But now, realistically, I still believe that this is going to be climbing. So we'll see what happens, right? But even as this trade was entered, right now it's sitting at a break even, so it's a risk-free trade. All right, guys. So unfortunately, I do not have the wins and losses for the week, as I stayed out of the market for the most part, except for this trade right here, like I showed you. Right, this was one of two trades I took right about there. That was my entry and exit. Right, so 15 pips risked. Where is it? There we go. So there you go. That was about a 7-to-1 ratio. Right, that was one of two trades I entered. This one and Nasdaq. Nasdaq, I jumped in because I saw it hit the bottom. Where was I? When it hit this bottom right here, I mean, I kind of snagged it. Where? No. Hang on a second. Where did I take Nasdaq? Oh, it was when I grabbed one of the bottoms here, and then when market opened on Sunday, it just kept climbing. So then I shut it down, very close to where market opened. Around here on Sunday, and then that was it, right? So I was in on the trade from Friday, from about this area here. I wrote it, and then I closed it off Sunday, and that was it, right? Those were the only two trades I took, and you know what? At that point in time, I still made 10-to-1 risk to reward on the week, right? Just off two trades. So, guys, I want to let you know that you don't have to be trading 14 times a day to make what you need to make. Just be smart about it. Right? When you see consolidation on pairs, it's just going sideways or it's very screwy, right? Where the EMAs aren't lining up. Just stay out. There's always going to be trades to take in the future, okay? Well, thanks for watching, and I'll see you next week.